Hi, my name is Tristan Macon, and I'm going to present to you today Target's financial statement analysis. To give you a background on Target, Target was started in 1962, and it's one of many individuals' favorite place to shop. Target sells essential needs from food, apparel, home decor, electronics, and more. You can go into the store of Target and get whatever you need. But now let's dive into the financials. For Target financials, I'm going to provide you balance sheet information and income statement information. Come on over and take a look. If you're looking at the balance sheet, which is on the top, and the income statement, which is on the bottom, the balance sheet, I'm going to give you a horizontal analysis. The horizontal analysis, if you're taking a look, it's going to give you information from left to right. So we're comparing Q1 2022 versus Q4 2021. And I'm just going to highlight the big variances. So for short-term assets, you're going to see a reduction by 17% from Q4 21 to Q1 22. And that's 21.5 billion, which is reduced 17% to 17.9 billion. Another thing I want to pinpoint is your equity. Equity went from 12.8 billion to 10.7 billion, and that's a 16% reduction. So that's just the balance sheet. I'm going to go straight into the income statement. The income statement gives you revenue, cost of sales, SG&A, depreciation, amortization, and it goes all the way down to your bottom line, which is your net income. Just to highlight the large variances, revenue, it went from 30.9 billion to 25.1. That's 19% reduction. This trickles down to your net income. Net income went from 1.5 billion to 1 billion, and that's a 35% reduction. And that's your horizontal analysis. Next, I'm going to talk about vertical analysis. Vertical analysis is giving you line item by line item, and it's giving you going up and down. So for your balance sheet, I'm going to pinpoint highlights. Equity, 12.8 to 10.7. So your 12.8 billion equity line is 24% of your total assets. In Q1 22, it went to 21% of your total assets. Now I'm going to go to your income statement. Your income statement highlights your revenue, cost of sales, operating income, all the way down to your net income. And what I want to pinpoint is that operating income. Operating income in Q4 21 was 2 billion. That was 7% of your total revenue. In Q1 22, it went to 1.3 billion, which is 5% of your total revenue. As you can see in Q4, operations did a good job for Target, but in Q1, it had a slight drop. So next, we're going to talk about Target's liquidity, solvency, and profitability analysis. So if you're looking back at the screen, I'm going to give you a few ratios. I'm not going to tell you everything, but from working capital is your current assets minus your liabilities, your current liabilities. And if you see in Q1 22, it's a negative amount. So what that means is you have more current liabilities than your current assets. If you look at Q4 21, it was pretty flat, almost break even. And Q1, it's a decline in working capital. Another thing we can talk about is your current ratio. It's pretty much similar, but your current ratio, it says 87% is your current assets versus current liabilities. And then in Q4, like I said, 21, it was flat. So 99% of current assets it almost equals your current liabilities. Another thing we can talk about is your return on assets. You see in Q1 22 is 2%, and that's net income plus interest expense divided by your average total assets. In Q4 21, it was 3%, and then your return on sales, it's net income plus interest expense divided by your sales or net sales, which is 4% in Q1 22 and then 5% in Q4 21. So you can see in Q1 there was slight reductions in your financials, but I will say Target is still looking fairly well financially. Next, I do want to talk about primary and secondary revenue and expense trends. As you know, Target, they sell clothes, food, electronics, home decor. That's your primary revenue. Your secondary revenue is items like miscellaneous income or property rent. So property income. For your expenses, your primary expenses is freight, outbound freight, inbound freight, and distribution center cost, along with inventory, markdowns, discounts, etc. Your secondary expenses are interest expense and taxes. If you look straight to the screen, I'm going to show you, we covered your primary revenue expenses, but I'm going to show you revenue trends. And if you can look, it's fairly small, but you'll see in Q4 is always trending with high revenue. What that means is in Q4, usually a lot of companies have a push to push sales, but that does not mean it trickles down to the bottom line. From this analysis, you'll see in Q2 presents you a better operating and net income. So in Q2, that's where they're making the most money. And that's all that I have for Target and my presentation. If you have any questions, please don't hesitate to ask. My name is Tristan Macon again, and I look forward to talking to you soon. Thanks.